Today, I want to talk about how Citadel is finally getting margin called and stopped out on multiple highly leveraged trades. I want to explain how this impacts the wider market, how it impacts Citadel, and of course, how it impacts AMC and GameStop. So stay tuned and let's make some money. So let's dive straight in with the key information. Just Dario tweeted saying we knew some institutions were brutally margin called in the past week. Warning bells were loud and clear in the market, and now names are starting to surface. This came after Reese Politics tweeted saying just in, Citadel has been stopped out from multiple highly leveraged trades. A source said Citadel is in the process of liquidating or trimming crowded positions, saying it would appear that hedge funds are currently at their most vulnerable position ever. Firstly, just to take a pause here for a second, this is absolutely brilliant news, and it's the exact news I've wanted to see for years now. It quite literally says that a source close to Citadel or from Citadel itself is in the process of liquidating or trimming crowded positions. One of the articles says that Citadel and Millennium losses expose pod shop vulnerabilities. It's saying that a fierce market sell-off fueled by President Trump's trade war and persistent inflation has forced major players like Citadel and Millennium Management to unwind crowded trades at an alarming pace. That's due to inherent vulnerabilities of their highly leveraged strategies and the kind of positions these funds are taking. And of course, it also says or warns that such rapid unwinding of positions can heighten systemic risks as multiple funds shed similar trades simultaneously. It's basically saying that when one hedge fund falls or when one hedge fund gets margin called on a position, many other hedge funds are also likely to get margin called on that same position as well. That's of course because when one hedge fund is margin called, certain stocks either drop in price or skyrocket in price, causing other hedge funds in those same trades to be margin called as well. Now, as I've touched on before, remember these hedge funds are going to try and unwind their smallest, least damaging positions first, leaving the largest, most damaging positions to be the last to be unwound. Basically saying it's easiest to unwind positions on small micro-cap stocks. It's then slightly more difficult to unwind positions on smaller cap growth stocks, and then obviously slightly more difficult to unwind positions on large mega cap blue chip tech stocks, and of course most difficult to unwind positions on illegal or heavily shorted or manipulated stocks being last. But of course, like a wave of dominoes, the more of these positions that are unwound, are margin called, are liquidated or are closed, the more positions that end up being closed as well as the sea of dominoes starts falling. It's important to note this sentence in the article that says these so-called pod shops or these so-called hedge funds, which parcel out billions across multiple teams, are seeing several of those teams stopped out. It's not saying all of the teams are stopped out. It's not saying all of their positions are stopped out just yet, but some of their positions, some of those teams have been stopped out and have been liquidated. Again, they're liquidating or trimming crowded positions. They're not liquidating and trimming all positions just yet, but of course, the more dominoes that fall leads to the entire hedge fund being liquidated all at the same time. Also guys, I wanted to talk through today's brilliant trade on ADTX and some changes to the Millionaire Mindset trading group. I've now included some sections so you can see my long-term portfolio, my long-term trades and my thoughts on the overall market, as well as the shorter-term day trades and medium-term options trades and swing trades as well. But with ADTX, I told the group that it had been building nicely in the pre-market, that it was consolidating well, and that I had my price alert set for the $6.20 breakout. When the market opened, it went right into a halt just before the breakout level. After the halt, we brought into ADTX and rode it up for a 60% gain. From that $6.20 breakout level, the price continued climbing all the way to $10 per share. What a trade. So guys, be sure to join the Millionaire Mindset Trading Group for the shorter term day trades and my long-term portfolio and long-term trades using the link in the description below. Again, Unusual Whales has added saying that hedge funds are selling stocks at a pace not seen in years. Biggums followed up by saying first they'll turn on each other, as banks are already starting to sue other banks right now. Biggums then said they'll start selling off assets, start closing positions, start being liquidated and margin called in positions as well. And ultimately said the real magic starts when these hedge funds can't get loans from the banks. When a hedge fund can keep borrowing, when it can keep receiving lending, they can keep those bad positions. But when banks stop lending to them, they can't keep the positions. Remember, as I've touched on in previous videos, Citadel took a $400 million loan, a $500 million loan. They sold off portions of their business. They've just taken another $1 billion in bonds. But when Citadel can't take any more borrowing, when no one is left to lend to them, that's when Citadel has to close out of all of their bad trades. I also saw this super interesting tweet from Bobby saying what's going on over at MMTLP. The court has just handed out subpoenas to a number of banks and institutions like Virtue Financial, the DTCC, FINRA, NASDAQ, Citadel, TD Ameritrade, Charles Schwab TradeStation and Anson Funds. We can see the United States Bankruptcy Court in regards to Metamaterials Incorporated has just issued subpoenas to all of these individual firms. Vaughan said it seems like we're about to learn some really cool information about these firms involved. It'll be super interesting to see what information is requested and handed over and what's inside all of those juicy documents. Of course, when more is revealed, I'll be sure to dive straight in with this key information. I also wanted to talk about this article about FINRA going after Alpine Securities, which had a huge disclosed short position in GTII. FINRA is accusing Alpine Securities of stealing more than $54.5 million from investors. It says this development comes at a time when retail investors have increasingly scrutinized Alpine Securities for potential market manipulation practices that have reportedly undermined trust in the financial system. We can see here the NSCC informed Alpine that it had a number of deficiencies back in 2022, charged them a $2.15 million backtesting charge, and it resulted due to net short portfolios, with the top driver being a concentrated short position in GTII. Those net short portfolios and the concentrated short position caused Alpine to fall below the backtesting target. FINRA complained that Alpine Securities engaged in fraudulent activities, resulting in substantial financial losses for its clients. As a result, FINRA is trying to expel Alpine Securities and is trying to disconnect them from the trading system. That, of course, basically means that Alpine Securities can't be a broker-dealer, market maker, or institution, or even a hedge fund. Basically, FINRA is trying to make sure Alpine Securities cannot operate, but it's currently being stuck in the courts. That basically means that Alpine Securities won't be able to operate, but this decision is currently stuck in the courts. Again, it'll also be super interesting to see how this case with Alpine Securities develops and if they are indeed disconnected. And if they are disconnected, what happens to that concentrated short position in GTII and other short positions? But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell and subscribe to the channel, because that way you'll be alerted when I upload a new video. Cheers.